Hi, everyone. It's Pete. We're going to start the meeting. Just to kind of kick us off a little bit, thank you for attending our town hall today for the 6th. We do have a special guest today. Her name is Jenny Hershaft. She is a lender relations specialist with the Arizona District Office with the U.S. Small Business Association. I have learned that she's been with the SBA for about 10 years. However, in the essence of time, I'm going to be excluding her full bio. Also, Jenny has back-to-back meetings today. Her next meeting is going to be at about 1:30, giving us about 20 minutes of her time today to allow her enough time to jump on that following meeting. We are going to ask to hold questions. However, please do email any questions to us at info@arcwood.com. That's, again, ARCWOOD.com. And we will compile those questions, and we will be sending them over to Jenny and her team for kind of a Q&A, and then we will distribute that out to you, obviously, as soon as possible. And then after Jenny, we're going to have Diana and Dennis. They are returning, and they will be providing us updates on the emergency FMLA and the sick leave. Today, we also have Matt Hetfield, CPA, joining us. He's a partner from Lohman Companies. He'll be on the phone today to answer any tax questions which might come up. Rich Bingaman is also available, although I'm not sure he was able to make today's call. And then following this meeting, you're going to get 2 pings from us. The first is going to be the handouts and the distribution materials that are coming from the SBA. It is going to include the interim final rule, the outline of the PPP, the Paycheck Protection Program, and then a number of other items of reference. The PowerPoint and the video, they're going to be following up later, just to afford us the time to convert and upload those videos for distributions, because that took us a little bit more time than we recognized last week. And then just for full quick disclosure, just know Arcwood Financial LLC, Arcwood Benefits Consulting, and Arcwood HR LLC. We are, obviously, our name, our DBA is Arcwood. We are all independent companies. We don't offer legal or tax advice. Our goal is to provide information to you for assistance in making decisions for your company. We're going to leave the legals and the tax and those details up to those professionals. And with that, I am going to unmute Jenny, and Jenny, we will be on our way. Can you hear us?
Yes, I can.
Awesome. All right, we will start the presentation. Jenny, are you there?
Yeah, I don't see a presentation.
Okay, well, we're on the first slide.
Okay.
Oh,
now,
and I should mention, everybody, is that Jenny just received an updated presentation about 3 minutes ago. So there might be a little bit of information that's different in that presentation, but that will be the one that we're going to be distributing to you. So if you do notice any differences from the video that you'll be receiving versus the presentation, that would be why. Thank you. Okay, Jenny, can you see my screen?
Well, and yes, I can. And thank you so much for the invitation.
Oh, thank you for having us.
Yes, thank you. So we'll get started with the Paycheck Protection Program, and that is capital to cover the cost of retaining employees. There's also the SBA Emergency Economic Injury Disaster Loan, which is a quick infusion for a smaller amount of cash to cover you right now. Also, we'll be talking about the Small Business Debt Relief Program to ease those fears that you may have about keeping up with your payments on your current or potential SBA loan. And then at the very end, we're going to talk about the resource partners available to also assist. Next slide. So the SBA Protection or Paycheck Protection Program, PPP loans, the program would provide cash flow assistance through 100% federally guaranteed loans to employers who maintain their payroll during this emergency. So if employers maintain their payroll, the loans will be forgiven. So what that means is forgiveness of up to 8 weeks of payroll based on employee retention and salary levels. No SBA fees and at least 6 months of deferral with maximum deferrals of up to a year. So small businesses and other eligible entities will be able to apply if they were harmed by COVID-19 between February 15th and June 30th, 2020. This program will be retroactive to February 15th in order to help bring workers who may have already been laid off back onto the payrolls. And loans are available through June 30th, 2020. Next slide. So the Payment Protection Program authorizes up to $349 billion in forgivable loans to small businesses to pay their employees during the COVID-19 crisis. And that means all loan terms will be the same for everyone. So I just spoke about the forgiveness. So as long as the loan proceeds are used to cover payroll costs and most mortgage interest, rent, and utility costs over the 8-week period after the loan is made, and employee and compensation levels are maintained. Payroll costs are also capped at $100,000 on an annualized basis for each employee. And due to likely high subscription, it is anticipated that not more than 25% of the forgiven amount may be for non-payroll costs. And again, loan payments will be deferred for 6 months. And for small business concerns, as well as any business concern, whether it's a 501c3 nonprofit or 501c19 veterans organization or tribal business concern, as described in Section 31B2C, that has fewer than 500 employees or the applicable size standard in number of employees for the North American Industry Classification System, which is the NAICS industry as provided by SBA of Hire. So this pertains to individuals who operate a sole proprietorship or as an independent contractor and eligible self-employed individuals. Any business concern that employs not more than 500 employees per physical location of the business concern and that is assigned a NAICS code beginning with a 72 for which the affiliation rules are waived. And affiliation rules are also waived for any business concern operating as a franchise that is assigned a franchise identifier code by the administration and the company that receives funding through a Small Business Investment Act. And businesses and entities must have been in operation on February 15th, 2020. So please keep that in mind. And as far as the PPP eligibility concerns in general, the 501c3 and the 501c19, the nonprofits with 500 employees or fewer, most nonprofit SBA size standards are based on revenue, not employee number. Religious organizations are now eligible, and there's further guidance available, and other types as well. So with a PPP loan, how much? Depending on your business's situation, the loan size will be calculated in different ways, and there's 3 examples below. But the maximum loan size is always $10 million. So if you were in business February 15th, 2019 to June 30th, 2019, your max loan is equal to 250% of your average monthly payroll cost during that time period. If your business employs seasonal workers, you can opt to choose March 1, 2019 as your time period start date. And the second way is if you were not in business between February 15th, 2019 through June 30th, 2019, your max loan is equal to 250% of your average monthly payroll cost between January 1, 2020 and February 29, 2020. If you took out an economic injury disaster loan, which is an idle loan, between February 15, 2020 and June 30th, 2020, and you want to refinance that loan into a PPP loan, you would add the outstanding loan amount to the payroll sum. And what do I need to apply? You will need to complete the Paycheck Protection Program loan application and submit the application with the required documentation to an approved lender that is available to process your application by June 30th, 2020. And if you ask what other documents will I need to include in the application, you will need to provide your lender with the payroll documentation. And so do I need to first look for other funds before applying to this program? No. We are waiving the usual SBA requirement that you try to obtain some or all of the other loan funds from other sources. And that means that we're waiving the credit elsewhere requirement. So although the program is open until June 30th, 2020, we encourage you to apply as quickly as you can because there is a funding cap and lenders need time to process your loan. And so how many loans can I take out under this program? One, only one. And what can I use the funds for? You should use the proceeds from these loans on your payroll costs, including benefits, interest on mortgage obligations incurred before February 15, 2020, rent under lease agreements in force before February 15, 2020, and utilities for which service began before February 15, 2020. And payroll explained. So you're going to ask what counts as payroll cost. So payroll costs include salary wages, commissions or tips, capped at $100,000 on an annualized basis for each employee. The employee benefits, including costs for vacation, parental, family, medical, or sick leave, allowance for separation or dismissal, payments required for the provisions of group health care benefits, including insurance premiums, and payment of any retirement benefits, state and local taxes assessed on compensation. And for a sole proprietor or independent contractor, that means wages, commissions, income, or net earnings from self-employment capped at $100,000 on an annualized basis for each employee. And on the PPP loan forgiveness, so how much of this loan will be forgiven? You will only owe money when your loan is due if you use the loan amount for anything other than payroll costs, mortgage interest, rent, and utility payments over the 8 weeks after getting the loan. And then due to the likely high subscription, as I mentioned before, it is anticipated that not more than 25% of the forgiven amount may be for non-payroll costs. So you will also owe money if you do not maintain your staff and payroll. And what that means is number of staff, level of payroll, and the rehiring. So on number of staff, your loan forgiveness will be reduced if you decrease your full-time employee headcount. On level of payroll, your loan forgiveness will also be reduced if you decrease salaries and wages by more than 25% for any employee that made less than $100,000 annualized in 2019. And for rehiring, if you have until June 30th, 2020 to restore your full-time employment and salary levels for any changes made between February 15th, 2020 and April 26, 2020. So how can I request loan forgiveness? You can submit a request to the lender that is servicing the loan. The request will include documents that verify the number of full-time equivalent employees and pay rates, as well as the payments on eligible mortgage, lease, and utility obligations. You must certify that the documents are true and that you use the forgiveness amount to keep employees and make eligible mortgage interest, rent, and utility payments. And the lender must make a decision on the forgiveness within the 60 days. And then your interest rate is 1.0%, so that's 1% fixed rate. So when do I need to start paying interest on my loan? All payments are deferred for 6 months. However, interest will continue to accrue over this period. And when is my loan due? In 2 years. Can I pay my loan earlier than 2 years? Yes. There are no prepayment penalties or fees. And do I need to pledge any collateral for these loans? No. No collateral is required. Do I need to personally guarantee this loan? No. There's no personal guarantee requirement. However, if the proceeds are used for fraudulent purposes, the U.S. government will pursue criminal charges against you. And then to also let you know, on the PPP, that is through lenders. And just to make that clear. So the SBA is required to pay the principal interest on and any associated fees owed on a 7A or 504 loan in regular servicing starting with the next payment due for both existing and new borrowers, and that is for the Small Business Debt Relief Program. So there's 3 scenarios outlined that cover all the possibilities with clear guidance. That would mean existing borrower not on deferment. That means 6 months of payments of principal, interest, and any associated fees begin with the next payment due on the loan. If it's existing borrower on deferment, that means 6 months of payments of principal, interest, and any associated fees, beginning with the next payment due on the loan after the deferment period. And the new borrower, 6 months of payments of principal, interest, and any associated fees, beginning with the first payment due on the loan, but only for new loans made within the first 6 months, starting from the date of enactment, 3/27/2020. So the eligibility on the economic injury disaster loan, the EIDL loan, is businesses with fewer than 500 employees, cooperatives, SOPs, and tribal small businesses with fewer than 500 employees, sole proprietors, independent contractors, and most private nonprofits must have been in existence on January 21, 2020. So the loan parameters. The maximum EIDL is a $2 million working capital loan at a rate of 3.75% for businesses. Nonprofits are 2.75% with up to a 30-year term. Payments on the coronavirus EIDL loans are deferred for 1 year. Up to $200,000 can be approved without a personal guarantee. Approval can be based on a credit score, and no first-year tax returns are required. Borrowers do not have to prove that they could get credit elsewhere. No collateral is required for loans of $25,000 or less. For loans of more than $25,000, general security interest in business assets will be used for collateral instead of real estate. The borrowers must allow the SBA to review its tax records. And for emergency $10,000 advance, eligible applicants for an EIDL can receive a $10,000 emergency grant within 3 days of application through December 31. There is no obligation to repay the grant. To receive the $10,000 emergency grant, it is not necessary to have an approved EIDL loan. However, if you are able to secure a PPP loan, the $10,000 grant will be subtracted from the forgiveness amount. And then you can reach out to www.sba.gov/disaster so you can apply. No additional documents necessary, and apply directly through SBA. And then here is a nice overview of the programs. It's a nice grid. So it should have a lot of quick information for you to review. It's a good synopsis.
And I think just because I just got a question in and it seems relevant, Jenny, just to be clear, so the Paycheck Protection Program, the PPP, that is the program that is going to be managed through our lenders.
Correct.
And for everyone on the call too, is I do have a list of the lenders that are currently processing the small business loans. So I'll include that in the distribution of the materials. But then the EIDL loans, or EIDL, I guess depending on which part of the country we're from.
Yeah, whichever way. My Kentucky accent will say.
That is for kind of on top of the PPP loans, but then also that is the one that's directly through the small business, not through your lenders.
Through the Office of Disaster, yes.
Through the Office of Disaster. Okay, great. Thank you.
Yes. And then I'll move into talking, I think, the resource partners. And if some of you may be aware or not aware, but we have resource partners available to assist: SCORE, Small Business Development Centers, Women's Business Centers, VBOC, SBA microlenders, and of course the SBA participating lenders, and through your libraries and chambers, universities, nonprofits, incubators, community colleges, state and local government departments, and elected officials. And then here's some additional links and resources. The Treasury Department has released fact sheets for small business lenders and small business borrowers interested in assessing the $349 billion Paycheck Protection Program, PPP, that was enacted last week as part of the CARES Act. And then here's some links for you to review. Also some small guidance and resources available during these times is at the www.sba.gov/coronavirus. And also, we encourage you to subscribe to our email updates via the sba.gov/updates, and then follow us on Twitter for the latest news on available SBA resources and services. And of course, if you need additional information, you can reach your local SBA office and resource partners. And again, for assistance in applying for the SBA Disaster Relief Program, in Arizona, businesses can contact SBA's Customer Service Center at 1-800-659-2955 or email Disaster Customer Assistance, or let me correct that, Disaster Customer Service at sba.gov.
Great. Thank you, Jenny. I know you're in a time crunch, and
yeah,
I appreciate you spending the time with us this afternoon. And then once we kind of gather up some of the questions and frequently asked questions, I'll get those to you.
Okay.
And then, but I know you also mentioned is that the interim final rule does have, it's stock full of information for individuals, which could probably answer a lot of questions, but there's a lot of information we can provide them.
Yes, and this was a very quick overview. So there's a lot more information in the links provided that goes into the deeper level, you know, like payroll cost and how to calculate and things like that. So.
Right. Well, I appreciate that. So again, thanks for your time, and I hope your next meeting goes well.
Wonderful, and thank you kindly. I appreciate it. We appreciate it at the SBA.
Oh, thank you.
Thank you.
So we'll transition gears now. I have just unmuted Diana. Diana has joined us, and Diana, if you could spend a few minutes just to kind of let us know if there's any updates, and I'm trying to find Dennis so I can unmute him as well.
Hi, everyone. Yeah, so I just wanted to go through a couple of just reminders and updates. The DOL has done another update of all of their FAQs online. There are now, I think, 80 some questions that they have answered on their site. No, 79 questions that they have answered to provide employers with additional guidance about the emergency leaves and how to put those towards their employees' questions and how to manage it as an employer. A couple of things with this is making sure that if you have not yet done so, that you need to make sure that you have posted the DOL poster that outlines the leave requirements and or email it out. Since everyone is teleworking, they are allowing us to email it out to everybody as a way of making sure employees are notified of their rights of this new paid sick leave. So please make sure if you have not yet done so that you get that done as soon as possible, because that was due 4/1. A couple of other things and a couple other questions that we've been getting a lot of is, I now have an employee that is requesting leave. What do I do now? So an employee who is requesting leave should do so in writing. You are allowed, and you should have a written notice from them asking for which leave they're asking for, whether it's the paid sick leave or the paid family medical leave. In that written notice, it should have their name, the dates of the leave that they are requesting, and a statement of the COVID reason why. So whether it's for their own health reasons, to care for someone, or for the school closure. With the school closure in particular, you can also ask for some additional documentation. That includes the name and ages of the children, the name of the school or child care facility that is closed, along with a notice from that school, whether it be a email from the school or the government notice that the schools are closed, but a notice that says that that the school is closed or child care is closed, and that a statement that represents that no one else is able to care for the child. And that's one of the new kind of updates with regards to that. And the IRS also has provided us with those guidelines for the documentation for the tax credit purposes, and to have that written documentation for the tax credit. The other question that we've been getting a lot around is the exclusions based on being a healthcare provider. So who is a health provider that can be excluded from providing this paid sick leave or expanded family medical leave to employees? And in the DOL, it's question number 56 on their FAQs that outlines that description. And so it's basically, it's a healthcare provider. Is anyone employed at a doctor's office, a hospital, a healthcare center, a clinic, a medical school, a local health department or agency, a nursing facility or retirement facility, nursing home, pharmacies. So that kind of gives you an idea of who would be excluded. If you have a specific question based on your company, then we at Arcwood can look at that and make sure that you are following the rules specifically towards that as well. And those were the main updates that I had based on the questions we've received most recently. Thankfully, the paid leave information is starting to slow down with all the changes, and we can actually kind of settle in on what this means for employers.
Okay, great. And I do see some questions are coming in, and we'll compile them like we did. But I think, do you have any? I'm sorry, I didn't mean to cut you off, Diana. Was that it?
All I had.
Okay, thanks. And from benefit plan considerations, we did put together a checklist, which I'll be including in the distribution to everybody that's attending today on the phone. But it's really, kind of digging into the what if questions to make sure that, depending upon specifically what you may or may not be doing at your organization, but how do your plan documents need to be updated or amended? Do we have to do summary material modifications, which are the little piece that gets communicated to the participants on the changes? Making sure for any of you that are applicable large employers, the Affordable Care Act is still up and running and operational. And so we just have to make sure that we have considerations in there just on how premium payments are being made, who's paying them, what impact this may or may not have on your 1095s next year. And then certainly how are we managing premium payments, because the IRS doesn't really give us specific guidance on how premium payments should be managed for individuals. We may want to continue on our plans just because we are getting some extensions from insurance companies on the actively at work provisions. However, what's the best way to have those premiums collected? And they do give some guidance for FMLA reasons, which it seems like that's where we're kind of leaning back on for that guidance. But these checklists are going to kind of help ask the questions so we can step through the documentations just to make sure that we are thinking, deliberately about the changes that are happening. And then a lot of questions that we're receiving on is on the rehire provisions. Most of the contracts and the certificates that we're receiving from the insurance companies for your benefit plans aren't necessarily going to be addressing a rehire provision. So if you are thinking about bringing folks back to your organization faster than the eligibility that is currently set out for your new hires, we just need to make sure that that is documented so that we can have something that is can be referenced and can be pulled out of a file cabinet 5 years from now if we ever have an agency knock on your door and say, why did you make the decisions that you made? Because really that's our focus on the benefit side of the house, is just making sure that we're kind of dotting the I's and crossing the T's so that if something does come up, hopefully nothing does, but in 5 years, we have a paper trail of the decisions that were made to actually get us to, through this environment. And then Diana, actually, I'm going to I didn't mute you back on, or I'm going to bring you back off mute, because I know that there are some other protected leaves, and so we may have individuals that are currently on an FMLA leave, and those, from my understanding, whatever their current leave status is today doesn't change, correct? If they're currently on some type of an FMLA leave or other type of leave?
Correct. So if they're on an FMLA leave, whether it's like a maternity leave or any other kind of FMLA leave, that continues in place, and so they're not eligible for the paid sick time or the paid family leave. With the FMLA, they work in together. So if an employee is out on an FMLA leave or has taken an FMLA leave and say used 6 weeks of their FMLA leave already, then they would only have 6 weeks available to use under the emergency paid family leave. It wouldn't be in an additional 12 weeks. So it works together. They're not separate leaves.
Great. Thank you for that. So please expect that checklist in the information that we'll be distributing out shortly after this meeting. And then again, the video and the recording is going to be coming out probably, I'm thinking, by Wednesday or Thursday. It should be a little bit faster than just our experience of last week, because we've learned how to manage those tools a little bit differently. But in the essence of time, we'll get the attachments out from the SBA soon, today, and then the videos and everything will follow up. I'm also going to unmute Matt right now, Matt Hetfield. He's a CPA. Matt, are there any things that any frequently asked questions that you'd like to review from your perspective, or anything that you heard from from Jenny this afternoon, as far as like a tax or management perspective?
Yeah, can you hear me all right?
Yes, I can hear you great.
Awesome. No, there really aren't many questions about this. This whole program has been pretty straightforward, so it's a little sarcasm there. There's been so many questions about this program. I think what we just heard in terms of an overview, I think are pretty much the typical talking points. I think some of the questions that are probably pertinent to people on this call, if they're considering a PPP loan, is really what I'm hearing on the street. I'm talking to a lot of bankers. I'm talking to companies that have actually already applied. In terms of one of the big questions is, where do I apply? How do I apply? And what if I don't have an existing relationship at a bank? What do I do? And so what many banks are saying, and I can tell you that right now it's BBVA, MidFirst, Johnson Bank, Chase Bank, and others have said they're not accepting new customers for this particular program. And I think there's a couple of reasons for that. One is their existing clients are just inundating them with requests to get this done, and so they want to prioritize existing clients. The second reason is there's certain things, if you look at the interim final ruling, which I know you're going to send out, which is really good. It is full of really good information. It's not the most exciting read in the world, but it is full of good information. But one of the things that it does say in there is that new clients to the bank will have to be verified for compliance with what's called BSA, which is the Bank Secrecy Act, which is, there's documentation that's required for banks are required to gain on customers, meaning that they comply with anti-money laundering and foreign bank accounts and stuff like that. That just adds to the process. So I think banks are shutting off new clients so they don't have to do that right now. But what I have heard some banks say is that people are going out and establishing new business bank accounts at some of these banks that are processing these loans. And so if you have nowhere else to go, I would probably say that's the first thing. I think MidFirst, I'm not trying to plug any banks, but I know one of my clients did that with MidFirst. They opened a bank account Thursday, and they're already in process, excuse me, of getting funded. So that's the first thing, is where do I go? The second thing I hear is, how long will this take? I can tell you, BBVA, they opened up their application. It's an online application about 2 o'clock on Friday. I got word that a client applied for about a $5 million loan. The max is $10 million, so there's a pretty sizable loan, a $5 million loan. It was approved yesterday and was going to be funded today. I have not heard word if it actually got funded, but that's moving really fast. So that's another big question that I keep hearing. Pete, I don't know if you want to get into some of the specifics on what's included in payroll. Do you want to go down that path and that granular level, or do you want to open it up and see if people have other questions?
I'm getting pinged with a couple of questions right now, and one of them is clarification on the 1099s. The assumption is that it's not 1099s they're using for service contractors that are working for the organization, but for possible 1099s for individuals in the organization?
So my understanding is you cannot include your payment for 1099s in this calculation. It has to be for W-2 employees. My understanding, if you are a 1099er, if it's going down that route, they can apply for the same type of loan, but not until I think it's April 9th or 10th. It's towards the end of this week. They basically have a 1 week delay before they can apply. But my understanding is you cannot apply for you can't include the cost of your 1099s in your cost of payroll.
Okay. And then owners and individuals who are not receiving a W-2, that'll be posted through their K-1s or their...
Yeah, that's a really good question. I know owner compensation. I saw an FAQ on that. I believe it was directly from the SBA website. One of the questions is, does owner compensation apply? Can you include owner compensation in this? And the answer was yes. So partnerships have a whole different level of complications, but my understanding is the draw that you're doing can be included in there because that's draw is kind of like your salary. Again, I just want to be clear, I'm not actually an expert tax person. I'm more on the accounting and on the financial reporting and financial accounting and controllership side of it. But my understanding is looking at some of these FAQs is that owner compensation can absolutely be included in that.
Okay. And a couple of the questions that came through is, do you think they're going to run out of money? How was the $350 billion number come up with?
So that's a really great question. I was on a call with a representative from the U.S. Chamber of Commerce who is kind of responsible for pushing this out there to the community, and this was through one of the local Chamber of Commerce's is where this call was. And that question, we posed that question and said, are they going to run out of money? There absolutely is a cap. It's a $350 billion cap. It's written right in the law. But this is according to him. He says it's possible, but highly unlikely. He said that, and there's some information that I didn't know, but $700 billion represents roughly the amount of 12 weeks of payroll for all small businesses in the United States. And so I, of course, being an accountant, I start doing calculations. And what that tells me, if you back it all down to, and use the 2.5 times multiplier, that means it's about $538.5 billion. That is a total possibility of companies applying for. Well, they only have $350 billion. And what he said to that is he said the Trump administration has made it very clear that if this gets oversubscribed, that they are prepared to go to Congress and ask for additional monies. But in his words, we don't think that it's going to happen that it gets oversubscribed. They made that number big enough. But when I did the numbers, it looks like it is possible. So my recommendation is get your apps in early. You will, when you do, I know this from our business, when you basically go through this process, your lending institution gives you a number. And once you have an approval number, you have your portion of that $350 billion reserved. When it gets dispersed, and again, they want to push it out quickly, is a different story. But I believe once you get the number, it's going to be dispersed within a few days. We're not talking weeks or months for sure. Does that help?
That does help. So coming from Chicago, what I heard you say is vote early and vote often.
I don't know about often, but definitely early. I think, you know, there's a reason why the banks are just swamped right now. I mean, obviously it's a huge need out there, but it states very clearly in the Act, as well as what we just heard, is, you know, they highly encourage us to apply early. This was a Chase WebEx that one of my clients was on. They had 68,000 participants in the WebEx. He waited 5 hours to get his spot in line, and then he was about halfway through it, and he got bumped out and never got back in. But 68,000 people sitting on a call to talk about this, and this was early last week when this thing was changing. That's the other thing I should tell you. This thing, I think we're kind of slowed down on the changes, but it's changing dramatically just over the last week. For example, if you look at the Act, it says it's a interest rate of 4% and it's a 10-year repayment period. Then it went to 0.5% and a 2-year repayment period, and now we're at a 1% and a 2-year repayment period. So there's little things like that that change. That's actually not that little difference between a 2-year and a 10-year repayment period. But the reasons why the interest rate was changing is because some of the banks went to the Treasury Secretary and just said, hey, that's below our cost of funds, and we're going to disperse our funds, and we're going to be losing money on every dollar that we disperse. And so that's why they bumped it from the 0.5% up to the 1%. That was actually I heard that right from, there was a presentation that the Treasury Secretary gave not that long ago and mentioned that. So.
Okay. Well, great.
Other questions?
Yeah, they've slowed down a little bit. So I think we're doing pretty good on time.
Good.
Hang on, I just got one more. Do you know what the phrase payments required for the provisions of group health care benefits, including insurance premiums, mean? Does that include, so that means do we include the insurance premiums in the loan request amount? I'll let you answer that one.
Yes, so I think this is a really a good thing, and it's interesting that she kind of didn't have time to cover what's included in payroll. That has been a hotly contested topic between our accounting firm as well as some other contacts out there. But I'll start with the top. So the AICPA came out with a ruling on Saturday night and pushed it out to all its members as to what payroll actually represents. And so the first thing is it's gross payroll. So up to, again, $100,000 per person. So it's not, there's some debate is do you deduct withholdings out of employees' paychecks that they elected to have withheld? AICPA said, no, we believe it's gross payroll. So this comes right off of your payroll register, off of your 941s, blah, blah, blah. Then what you will want to do is you'll want to add certain things to that. And so you'll want to add to that health insurance costs paid by the employer. So this is the employer portion of health insurance premiums for that, to get an average monthly before you multiply it by 2.5. And so if you have let's say it's $1,000 a month premium, employer pays $600, employee pays $400, you include $600 for that particular employee for that month, and then you accumulate all those down. The other thing you want to add into it is any retirement benefit costs. So if you match a 401k, let's say, you'll want to include that into your calculation as well. Just remember you back out any amounts that per month that are over 8333. That's the equivalent of $100,000 per year. One thing that it says in there, it says vacation pay. That is still an open question. Does that mean that if the person took vacation, you paid them their base amount and they just charged their vacation? Or does that mean you add into it their vacation accrual? I don't have a good answer for you. I will tell you I probably would include the amount that I am putting away for vacation, because they could take that at any time, especially if it's not a user to lose it and they accrue it, and if they leave the organization, they would take that with them. So let's say you did include it and then they left a month into this program, you would have to pay them out that vacation. That's my justification for including it, but I have not found any authoritative pronouncement to determine what you actually would include in that for vacation, other than just as vacation pay.
Great. Now you're mentioning that things are changing, and now this is the interim final rule. What if somebody submitted their loan applications and they've received their number that you'd mentioned to hold their spot in line, but they did not include all of the, say, medical, the 401k match? Is there room to make adjustments to the loans before they're finalized?
I will tell you, I think that's going to be a question for you going back to your bank. And I bet you it's probably going to be handled on a bank-by-bank basis. I don't have a good answer on that other than talk to your bank. And hopefully you have a relationship with a loan officer or at least your relationship manager, and they can get an answer to that question. But you're absolutely right. I mean, like literally the AICPA just came out with their guidance on Saturday night. Well, I know, companies already had applications in the process. So.
And we are using the services of a PEO, which means that we are being paid on their tax ID number. So therefore, we don't have our own 940, 941 reporting. Is that required for substantiating our payroll, or is it just payroll reports?
So what I would do is they should be able to, your PEO should be able to run you payroll reports for that particular period. If they're using ADP, and again, I'm not pushing any one payroll company over the other, but I just know I've seen an ADP report that actually they call it the PPP report, which comes up with the same time period that we just heard about, the measurement period. So if your PEO could produce a report like that for that time period, that's just for your particular company, and they should be able to parse it that way, then I would use that as your support. It doesn't say that you need to have 940s, 941s. Your bank will probably want to try and tie it to that because that's the tie down. But I would explain to your bank as to why you use this, and which brings me back to a bigger question is what I've seen is you need to get the bank. The bank has certain underwriting requirements. It's listed right in the interim final rule as to what they have to do, and they have to validate the numbers. My belief is once they validate the numbers and they get happy with them, and then they submit to the SBA for approval to get that number, I don't think the SBA is doing a real hard look at those numbers. And this really, confirms what I heard from the SBA chief as well as the Treasury Secretary, which is we want to get these monies out there fast. We're not going to be the roadblock on this. So I think you need to get your bank happy with it. And then, once it gets over to SBA, they're going to basically, say, hey, the bank's happy with it. We're happy with it. Disperse the funds. But back to your question is, I would, if it was me, I would use the payroll reports that my PEO provides to me, or whatever they provide to me that I pay to that, on a monthly basis, the accumulation of either it's monthly or 24 of them or 26 of them for each pay period. I would use that as the support for my payroll number, gross payroll.
Great. And then I think one last final question. If the PPP loan can be forgiven or turned into a grant, why do they have a due date? I think I'll let you answer that.
Let's talk about the forgiveness because that's really important. You don't want to have a nasty surprise come June 30th. So the idea of this, and this is right from Mnuchin, the Treasury Secretary, he says we want, and actually we heard it in here in this presentation, we want our employers to keep their employees paid during this time period. And what he said last Thursday is he said, we believe that this economic downturn is caused by one thing and one thing only, and we want companies, especially our small businesses, to be fully ready, ramped up, and ready to go once the country is reopened. And so we want those employees to stay employed and have these companies retain their quality employees. So it's 2 months, right? So it's 8 weeks of payroll. They're thinking, that gives you the idea of what they're thinking right now, is they want you to retain your employees for 8 weeks. If you don't, then there is a good chance that you are going to have to pay this money back. And that's in 75%, we saw it in that presentation, you need to use the loan proceeds, at least 75% of it, for payroll related items. And basically that's anything payroll related directly to the employee, and that could be benefits and insurances and all that type of stuff. What it's excluding out of that is excluding rents and mortgage, payments, et cetera, utilities. That's what the 25% is used for. But what you're going to have to do is at the end of end of June, June 30th, which is the end of the 8-week period, you're going to have to actually apply for loan forgiveness with your bank. And you have to supply documents to your bank to say, here's what I did, here's my FTEs, and here's my total payroll that I used to support the loan, and here's what I did with those proceeds over the next 2 months. And look at, I'm above I used 75% of it. I kept my FTEs the same, or they didn't decrease. And it's interesting. If they decrease by 1, do they take a percent? If you have 10 employees, you go to 9. Are they going to take 10% and call that now a loan? I don't know yet. There is actually further guidance in the interim final rule. They said there's further guidance going to be coming out on that type of stuff sometime later April. But the June 30th is the reason why it's the drop dead date of applying for this, but it's also the drop dead date for when these loans will actually start to become payable or forgiven. That's a long answer to your question, but I don't know why anyone would wait until June to apply for these loans, because if you dropped your staff, it'd be very hard unless you did a whole bunch of back pay to get your payroll to be at that certain level, and you'll basically be taking on a loan instead of a forgiveness period.
Right. And then there's a follow-up kind of from that is, can you review how the EIDL loans tie into the PPP? So the PPP sounds like it's being used for really keeping everybody on payroll. So then if you could also spend just a few minutes on the purpose of the EIDL loans in this process. Yeah,
I saw a frequently asked question on the EIDL loan. Let me see if I can find that. So I'm not exactly sure why someone would take the EIDL loan over the PPP. But I'll just read it. This says, if you've applied or received an EIDL loan related to COVID before the PPP program became available, will I be able to refinance it into a PPP loan? So let's get this one out of the way first. It says, yes, if you received an EIDL loan related to COVID between January 31st and the date at which the PPP becomes available to you, you would be able to refinance the EIDL into the PPP loan forgiveness program. However, you may not take out an EIDL and a PPP for the same purposes. And that right there, that little sentence right there, is kind of new to me. And this was just something that just came out today on an FAQ. So I'm not exactly sure what that means, because I've always heard you could do an EIDL and a PPP. But let me reread this. It says, remaining portions of the EIDL for purposes other than those laid out in the loan forgiveness terms, which we've talked about, would remain a loan. If you took advantage of an EIDL grant of up to $10,000, that's that first $10,000 payment, that amount would be subtracted from the amount forgiven under the PPP. So I know that's convoluted, but that's probably the best way that I read it right now. It is convoluted. I have heard you could do both, and I heard you could apply for both. And I did hear that the $10,000 would come out of your PPP loans, but that's the only amount that I heard that would come out of the PPP loan. Okay, cool. I see you put up on the screen here. I don't know if it says anything about that, what exactly happens, but in my, I guess in my opinion, or my questioning is, I'm not sure, unless you needed more funds, I'm not sure why you would do an EIDL prior to the PPP, unless obviously the PPP wasn't out yet, or at this point, why you would do an EIDL right now instead of a PPP loan. There's a lot of stuff that goes into EIDL loan, personal guarantee, or at least you have to guarantee the loan with your assets of your business. You have to provide a whole lot more information to the bank. It's a longer, drawn-out process. I heard 3 weeks to get full funding. Yes, you get the first $10,000 pretty quickly, but there's no loan forgiveness process. Oh, I do want to say on loan forgiveness, I did find this out, and you won't see this anywhere, but the loan forgiveness portion is tax-free. So you're not going to get a nasty surprise from the IRS at the end of next year or whatever it is, and I had $200,000 PPP loan forgiven. They're not going to have you include that as income. that's what I heard. I haven't found anything on that, but it would also make sense. So.
Right. Well, great. Well, thank you, Matt and Diana. And I never caught up with Dennis to unmute him, so I don't know if he had anything to share, but he didn't email me, so I think we're good there. And I'd like to thank all the participants. We will be compiling all the attachments that came from Jenny today, and we'll be distributing that by the end of business. If you want to continue to ask questions, please send them to info@arcwood.com. And if they're related to the SBA, then we'll send out those questions to Jenny and her team to have those answered. But if there's anything else as far as the emergency FMLA or the paid sick leave, or obviously benefit related, then we'll certainly be answering those in-house here as well. So thank you everyone for their time, and be safe out there. We'll talk to you guys next week, 1 o'clock. The meeting ID will stay the same. So we did set it up on a recurring meeting. So the information to log on next Monday at 1 p.m. Should remain the same, but we'll also be sending out additional invitations just as reminders. Thank you. Have a great day.